Bank price manipulation. When people imagine gold fraud, they usually think about fake bars, counterfeit coins, or stolen assets. But sometimes the manipulation happens at a much higher level, inside the financial institutions people trust the most. In 2014, it became public that some of the world's largest banks had been influencing the global price of gold during daily benchmark meetings known as the London Gold Fixing. These meetings were meant to establish fair market value, a reference price used worldwide. Instead, they became a tool for influence. Nature of the fraud. These institutions did not need to counterfeit gold itself. They influenced something even more powerful: perception. By coordinating trades and sharing strategies during price-setting sessions, they shaped how the market moved. Investors believed the price was natural and objective. In reality, it was sometimes guided behind closed doors. This kind of fraud is harder to detect because nothing physical appears wrong. No fake bars, no fake coins, only a number on a screen, and that number decides how billions of dollars move. Penalties and consequences. Major banks eventually paid large fines and settlements, but the greater damage was psychological. Trust in financial systems weakened. The scandal revealed an uncomfortable truth. Gold is not only vulnerable to criminals outside the system, but also to those operating within it. Even institutions built on reputation can influence markets when profit becomes the priority. And when trust is shaken at that level, the impact spreads across the entire global economy. Australian Dragon coin counterfeits. In 2018, collectors began hearing warnings about counterfeit versions of the famous Lunar Dragon gold coin produced by the Perth Mint. These coins were popular, recognizable, and valuable, which made them ideal targets. The counterfeit versions appeared almost identical to the originals. For buyers, there was little visual difference, and that made them extremely dangerous. Differences between real and fake. The fake coins were produced using copper cores covered with thin layers of gold. Their weight, shine, and design were carefully replicated. To the untrained eye, they looked legitimate. Genuine coins were worth thousands of dollars. Counterfeit versions sold cheaply on underground markets, but many buyers didn't know the difference. They believed they were purchasing real gold. Trust became the tool that enabled the fraud. Market response. As the counterfeit spread across Asia and Europe, authorities and collectors had to react quickly. The Perth Mint introduced new security measures, including holograms and microscopic engravings. This case showed how quickly counterfeit products can move through global markets. It also highlighted the constant race between innovation and deception. Every time security improves, fraudsters adapt, and the cycle continues. Heathrow Gold Heist, 1983. On a cold morning in November 1983, one of the most dramatic gold robberies in history took place at Heathrow Airport in London. A criminal gang broke into a warehouse linked to the Brinksmat Security Company and stole enormous quantities of gold. It was not a spontaneous crime. It was planned, calculated, and executed with precision. Scale of the crime. The thieves escaped with approximately 3 tons of gold bars. At the time, the value was around £26 million. Today, that amount would be worth more than £100 million. The scale of the operation shocked authorities. It showed how valuable resources like gold could motivate organized, ambitious, and highly coordinated criminal networks. This was not just theft, it was a statement. Aftermath. The stolen gold was melted down and reintroduced into the market through complex criminal and financial channels. Some individuals were eventually arrested and sentenced, but most of the gold was never recovered. The heist became legendary, not only because of the money involved, but because of what it revealed about human motivation. Gold can inspire discipline, ambition, and greatness, but it can also inspire risk, crime, and obsession. Italian jewelry fraud, 2015. In 2015, authorities in Milan uncovered a large jewelry fraud operation. Rings marketed as 18-karat gold were sold to customers who believed they were buying something valuable and permanent. At first, everything seemed legitimate. The rings looked authentic, felt solid, and were sold through trusted channels. But appearances can deceive. Signs of counterfeiting. Over time, customers noticed changes. The gold coating began to fade. The metal underneath darkened. Some rings even showed signs of rust. Investigations revealed the truth. The jewelry was made of brass covered with a thin layer of gold. The fraud relied on visual appeal, presentation, and trust. Buyers did not question the product because it looked right. Legal action. Police arrested multiple individuals connected to the operation and seized large quantities of fake jewelry. Financial damage reached millions of euros, but the case highlighted something deeper than money. It showed how easily everyday consumers can be deceived when something appears valuable. Gold creates expectation, and expectation can sometimes replace caution. Lessons for investors. Looking across all these cases, one message becomes clear. Gold fraud exists everywhere. It affects individuals, collectors, institutions, and entire markets. Tens of thousands of people have been scammed. Losses reach billions, and the methods continue evolving. Gold is trusted, and that trust is exactly what makes it vulnerable. How to buy gold safely. Buying gold requires more than belief. It requires verification. Investors must rely on official mints, certified dealers, and professional testing whenever possible. Certificates help, but they are not enough on their own. Fraudsters can replicate documents as easily as products. If an offer seems too good to be true, it almost always is. Caution is not weakness, it is protection. Conclusion: gold and trust. Gold itself is neutral. It does not deceive. People do. The real challenge lies in human behavior: desire, fear, ambition, and the promise of security. Every scam shows how powerful these emotions are. Gold represents wealth, stability, and permanence, but it also tests judgment. In the end, gold is not only a metal, it is a mirror of trust and a reminder that trust must always be earned, never assumed.